because the big money is going to figure out they're on the wrong side of it. You just got to get the hell out of those countries as fast as you can, even if that is the United States. I don't know. I hope that's not going to be. That's just how dumb most Americans are. There's not a lot of smart people who are managing gold portfolios or silver mining stocks. They're in tech, they're in biotech, they're in something sexier, right? It's not like the smartest people are becoming geologists. And the gold made an all-time record high last week in British pounds. No one talks about that. When the pound was crashing, gold was the lifeline in the UK. It made an all-time record. In my gold business, and I just experienced this through the bank because the bank had a lot of gold and we're trying to move that gold out, and some of it needed to be liquidated, the bank's hedge book. And I was talking to the company that was storing all the bars, and he was commenting on this huge surge in premiums for physical bars of gold and silver. He's never seen them this high in his life. There's tremendous demand. Even as the price was dropping, demand was surging around the world. Because obviously, look, there's inflation. People are looking for a real hedge, and so they're trying to buy gold and silver. But again, the big money, the speculators, all they're doing is looking at the interest rates and the Fed, and they've got these computer algorithms that are like, oh, bonds down, interest rates up, sell gold, right? They just think that higher interest rates are bad for gold. They don't get it. These are just higher nominal interest rates. They're not higher real interest rates. In fact, we still have negative interest rates. We haven't even come close to positive interest rates. We have been in a bullish environment for gold the entire time. It's just that these computer algorithms don't get that. But the big money has been trading in the futures market. And so that has kind of been the dog wagging the tail of the physical market. But at some point, and maybe soon, maybe this week, who knows, that's going to flip. Because the big money is going to figure out they're on the wrong side of this trade, especially the ones that are short. And given what I know about the shortage in the physical market, it's possible that people that actually want physical gold may be buying some of these contracts, looking to take physical delivery, which is going to be a shock to the shorts when they're forced to deliver gold that they don't have. Remember, all the people that are selling gold and silver futures contracts, unless they're a hedger, unless they're a mining company, right, and they're hedging, if they're a speculator and they're just short in gold and silver, they don't actually have any. Like when you short a stock, you're supposed to have the stock, right? You have to own the stock, you borrow it. If you don't have it, you get the shares, and then you sell them. But you sell futures on gold and silver, you don't have to have any gold and silver at all. Well, normally it doesn't matter that you don't have it because the guy that bought it, he don't want it either, right? Everybody settles up in cash. But what happens if the long decides to tell the futures exchange, yeah, I actually want my gold. Here's my address, send it to me. Send me my bars. Now the exchange has to send a notice to the guy who's short saying, hey, you remember that silver you sold or that gold you sold? Yeah, you got to deliver it. Here's the address you got to send it to. And he's like, shit, I don't have it. How am I going to get it? And so now he's got to buy his way out of that contract unless he's going to go find that physical metal. It's the opposite of what happened with oil. Remember when oil prices went to negative $30 a barrel during COVID? Why was that? Well, because the people who bought the contracts were being forced to take delivery. The people who sold the oil, right, they didn't want the oil. So they said, I'm going to deliver it. I got no place for it. And so then the people who own the contracts were being told, yeah, we're going to deliver all this oil to you. Where do you want it? And I don't want it. So now they had to pay people to take it off their hands. So people were paying $30 a barrel so they didn't have to take delivery of the oil, right? And so you saw that crazy market. Well, you're going to see something as crazy as that on the upside of gold when people are scrambling to deliver on their gold contracts when they can't find the physical metal. So that's all coming. So that's why, look, I tell people just, buy your gold, buy your silver while you can get it, because at some point you won't be able to get it because the people are going to figure out what's happening. Just like, the subprime market imploded all at once. It was obvious for years to me, but even within weeks of the implosion, people were still buying that crap and paying above par. Then all of a sudden, emperor has no clothes, and in a matter of a week, everything went to zero. So when this thing turns, it's going to unravel. That's why, again, I keep saying you can't wait. You can't try to be so cute and finesse this. You got to be willing to be early. All right, I was way early. I was more than a decade early. Okay, but what am I going to do? I see this stuff way in advance because to me, it's that crystal clear. But I also can see that we're so much closer right now. It is not worth betting that they're going to be able to pull another rabbit out of it. The problem is savings are really the lifeblood of economic growth because savings under consumption is where a capital investment comes from. Get my book, How an Economy Grows and Why It Crashes. It's a very simple way of explaining this important concept. But if you wipe out everybody's debt, you wipe out everybody's savings. And that is a disaster to wipe out the savings because now, you turn back the clock because now you got to reaccumulate. You have no more money to loan out to finance things. And, people were expecting to live off those savings. Yeah, it's great when people no longer have debt. But one person's liability is somebody's asset. There are a lot of people that are planning on retiring. They're going to have to come up with a new plan. They ain't going to retire. They're going to have to keep working because they've been wiped out. So look, this is going to be a terrible thing that's going to happen. But there is a silver lining in that if it's a catalyst for countries to re-embrace free market capitalism, and maybe for some countries it will be. But for other countries, it may be a catalyst to go all in on government and become totalitarian states. And you just got to get the hell out of those countries as fast as you can, even if that is the United States. I don't know. I hope that's not going to be the United States, but it may be. I mean, because I'm not necessarily going to get what I hope for. We're going to get what the political reality is. And unfortunately, the electorate has been dumbed down over the decades, and so they may just go for socialism. That's just how dumb most Americans are when it comes to understanding of economics. So GDX is an index of gold mining stocks. GLD is an ETF of gold bullion. So when you're buying GLD, you're buying physical gold. Now, same thing as like somebody called up earlier about kinesis. Same thing. By kinesis, you're buying physical gold. It's like buying GLD, except I can't send my GLD to my buddy, in Europe, or I can't use my GLD to go to Starbucks and buy a cup of coffee like you could in theory with kinesis or with Gcoin or any one of these tokens that's backed by gold. So, but they're like an ETF, right? Because you have the gold there, and then there's a share associated with it, as opposed to a token that's been created. But GDX is just a diversified basket of mining stocks. Now, personally, I think my portfolio that Adrian Day manages at my gold fund, the Euro Pacific Gold Fund, or the separately managed accounts that Adrian manages for my clients, I think Adrian is smart enough to beat an index. Because the thing with the index is it just buys everything. But I think Adrian can figure out which stocks are better to own and which stocks are better to avoid. He's been doing this for 40 years. He knows the mining sector. He doesn't have to buy an index. You buy the index when you don't know what you're doing. And that way, I'm not going to make a mistake. I'm just going to buy the index. Now, sometimes you buy it because there's more liquidity there, right, than any one individual name. You're a big fund. Okay, I'm going to buy the index because, I don't have enough liquidity in some of these names. But if you're an individual investor, you don't have to do that. Buy the Euro Pacific Gold Fund, set up a managed account with me, let Adrian Day build you a portfolio. He will beat these indexes. I'm confident of that. He's done it for 30 or 40 years. And he doesn't compete against that many people. There's not a lot of smart people who are managing gold portfolios or silver mining stocks. They're in tech, they're in biotech, they're in something sexier, right? It's not like the smartest people are becoming geologists. And nobody cares about mining. All the big investment banking deals don't happen in mining, right? It's been in a bear market for so long. So Adrian is just, he's playing a game, with a bunch of lightweights. So he's able to find the value that other people can't find. And so I think that we're going to way outperform the mining stocks that you would get if you just bought everything. I think that He's going to buy the stuff that's going to go up more and not buy the stuff that's going to go up less, or maybe even the stuff that goes to zero. I think he knows the difference. And so if you want to be in gold stocks, then I think you look into the Euro Pacific Gold Fund and separately managed accounts, knowing they have a lot more risk because you're investing in a company. You're a stockholder in a business. A lot can go wrong. That's very different than buying physical gold, let's say at Schiff Gold, or buying an ETF like GLD. That, to me, is an alternative form of liquidity. That's real money versus owning dollars or euros or yen. Yes, it's going to have a little bit more volatility, but look, the